Hey Samfam, this is Ria from Samaya. Hey Samfam, how is your preparation going on? As exams are fast approaching, we should go on a very fast pace, right? And thank you for all the amazing response for the first video for the professional that they have to write audit answers, and you have got given a very good engagement ratio for that. And now we'll move on with today we are going to discuss about the fiscal laws. This is often we'll leave it as a choice because there's something so much to remember, so much to like by heart and memorize, right? But we'll just discuss in such a way that we need not memorize all the whole 3CD and the clauses and all. We'll just remember how easily we could write. If we understand anything, we need not memorize that. It comes from our heart. We need not by heart that. And with that said, we'll just discuss 3CD, but for a change, we will discuss it from the below. From the last class, that is 44th class, there were only 44 clauses, and these were few important clauses. You need to just revise it just before the exam. You have to really memorize that. You have to really go through these clauses and don't see to memorize that so that we could write it in our examination. If you see all the past question papers, all the MTPs, RTPs, all the questions were asked from only these clauses. Okay, with that said, you're 70% secure that you could write that question from the fiscal laws if you had given an examination. You need not leave it for choice because any question, even if it's for a 1 mark, it wins so much mark for a question paper. It's important because it carries some marks. But how you have to study is like where to leave or what not to study and what to study. You see, remembering all these 44 clauses just 1 hour before the examination could leave with you a lot of stress for just the 4 marks there. But just 10 to 15 clauses here doesn't make any so much stress. Now we'll discuss about 44 clause, breakup of total expenditure of entities, whether they were registered or not registered under the GST. First thing, we have to write the total expenditure of the entity and expenditure in respect of entities registered under GST. That is, whom we bought from were registered under entities. And first thing, we have to give segregation like exempt from GST. What all the purchases we have made from with our which are exempt from GST. That is, you see, the purchaser, the supplier of exempt goods may be registered, not registered. If he solely supplies only exempt goods, then he need not, there's no implication for him to register. But if he sells both exempt goods and registered goods, he has a liability to get registered, right? That talking about this here, that is, if you bought some exempted goods from the registered entities, you have to mention it here. And if you bought from composition scheme or composition dealers, you have to write it from here, and other registered entities have to write it here. All the three were entities from registered under GST, and the total payments to the registered entities. The summary of all the sum of all these three things here, and the expenditure that is relating to entities not under registered under GST. That is, the difference between these two was this, and that's it. And we'll move on to the next clause. Yeah, but before that, I want to tell you that this is an important clause number. Why? Because it was kept hold till 31st March 2022, and it's going to be applicable for the first time for this March 23. That is March 2023 for this financial year end. So this is an important clause that the ICA may test you. Under clause 43, we have to check whether the SC or parent entity or alternate reporting entity is liable to furnish report under section 286(2). What is 286(2) talking about? The CBC report, that is a country by country report. What we have heard this in international taxation BEPS action plan 13, right? Yes, they are talking about the same thing, and if as they are liable to report that report, CBC report. Please furnish the following details: whether the report has been furnished by the entity or not, whether they're asking about the compliance of reporting, that name of the parent entity and form of and the name of alternate reporting entity and the date of furnishing of report. In what report they have to submit? In form 3 CEAC they have to submit. You need not remember that form number. I'm just giving a brief up of these things to get retrieval for the form numbers in your international taxation revision. And in clause 42A, whether the SC is required to furnish form 61, 61A, 61B. Whereas form 61 is filed when the deposits of withdrawal were more than or equal to 50 lakhs, 61A would be that, and Form 61 is the SC has only agricultural income and they do not have any other chargeable income, only exempt income. 61B is when they file SFTs, the Statement of Financial Transaction. Most banks do that, whether SC is required to furnish those statements or not. Yes or no? If yes, what they have to do? They have to give income tax department the identification number, might be the PAN number, and type of the form, and the due date for furnishing that, and date of furnishing, and whether the form contains any information about all the details. If yes, please furnish the details that are required to be reported. And this is with regard to clause 42. What? This is also an important clause with regards to form 61, 61A and 61B. And please furnish the detail. And now we'll move on to clause 41. And in clause 41, they talk about the demands that were raised and the refund that have been issued to the entity that were other than from Income Tax Act and Wealth Act. And with regards to 40 clause, they are talking about some details with regards to turnover, profit and stock, or total turnover, gross profit, net profit, stock in trade, and materials consumed if it's a manufacturing entity. And that's with regards to 40. And 39 is whether any audit was conducted under Section 72A of Finance Act 1994. What is 72A is service, or if for the service entities, they have failed to declare and compute the value of the taxable services that they're providing, then the service audit would be special audit. Service audit would be on that entity with relation to the computation of valuation of the taxable services, etc., whether that audit has been conducted, or for under clause 38, whether any audit under excise department, excise act had been conducted or not. And under clause 37, any cost audit that was carried out. And for all these three types of audits, whether any disqualification, disagreement of any item, value, quantity that was identified by such respective auditors, they have to be given 37, 38 and 39. And in clause 36A, whether the SC has received any kind of dividend. If yes, then the amount received and the date received have to be reported. And with regards to 35, if it's a trading concern, the quantitative details have to be given: opening stock, purchases, sales during the previous year, and closing stock, and that's short or excess. This is mostly like a what? Trading profit and loss account, right? In respect, it's a manufacturing concern. What are the quantitative details it has to be given? It has to, you see, in clause 40 also we have been reporting few things, right? This is on the date of balance sheet. It's with regards to the turnover and profit only the previous year, but with regards to here is only the data that is regards to only previous year. That is the raw material. That is so much in detail here. 40 is just a block of amounts. This is, they have asked so much of segregation to it. Opening stock, purchases, consumptions during the previous year, sales, closing stock, yield of finished goods and percentage of yield, any short or excess. And for the finished goods, opening stock, purchases, quantity manufactured, sales, closing stock, and shortage and excess. You have to write what, you need not memorize all these things. You have to write what are all the things that were in the question paper, with what are all the things that you have to put in the P&L account. That's it. Nothing much more than that, except the yield of financial products and a percentage of yield. Only these 2 points have to be remembered once. And others, all the things, you have been preparing financials like P&L account. You have prepared hundreds of P&Ls and hundreds of balance sheet by this time, right? So only the 2 extra things were only this. Others all that they have given in the question paper that were to be put in the P&L and balance sheet, you could write it. And now with respect to 34 clause, we have all details about TDS and TCS only. With respect to the amount of TDS or TCS, that is clause A, and with regards to the TDS and TCS statements, that is clause B. Okay, we'll see first one with regards to the TAN number that they have, and the section number and the nature of payment, that is, say, like 195, 192, etc., salary or remuneration, etc., for fees for professional services, and the total amount of payment or receipt of nature of specified in column 3. That is, if you think we'll go with like a salary under section 192, all the expenditure, all the P&L expenditure that was occurred during the year have to be in column 4. Okay, and on all the salary we don't deduct TDS, right? All that which is applicable, which is required to be deducted TDS, have to be in column 5. Okay, on all of that how much we have deducted, what is required to be deducted, that portion on what we have deducted, how much we have deducted. If any was deducted, in short, we have to write that amount here. And after that, we have to write beside those two columns the amount of tax deducted. That's it. What are they talking about? First thing, the TAN number and the section number and the nature of payment there. As per our example, it is 192 salaries, and in 192 salaries, after the nature of payment, all the expenditure that the entity had incurred, all the expenditure entity had incurred in its P&L account have to be written it here in column number 4. After that, which is required, and segregate this, and which is required to be deducted, TDS, have to write it here. And after that, how much we have deducted from the required to be deducted. Okay, how much of amount we have deducted, we have to write it here. And how much we have not detected or detected less was in 8. And beside that, beside both the columns, we have to write the amount of tax that was deducted, the TDS deducted, and the tax that was deducted or collected which was not deposited comes under last column. And that is with regards to TDS. And with regards to the statements were the TAN number as usual, and the type of form, and due date for furnishing that, and the date of furnishing, and whether the statement has all details or not. If not, provide the details which were not reported there. And that's with regards to clause 34. And with regards to clause 33 is whether the entity is claiming any kind of exemptions under chapter 6A like ATC, etc. And under section 10A, 10A like says, etc. The section and the amount that was admissible for claiming, etc. have to be reported in clause 33. Now we'll see 32nd clause with regards to details of brought forward losses and the depreciation allowances. What all the details have to be given? The assessment year and the nature of loss, whether it's a brought forward loss or an absorbed depreciation, the amount as per returns, and the allowances that are not allowed here. Not allowed if the company opts for 115 BAA, BAC or BAD, and the amount that was adjusted by the withdrawal of additional depreciation under section 115 BAC and BAD, where the additional depreciation is not allowed, right, in few sections. And the amount as assessed will have to be given. This is the eligible amount. And under clause 32nd A, right, and in B was where a change in shareholding of the company, why they're talking about the change in shareholding of the company. If the shareholding was more than, if it gets changed or substantially changes more than 51% or more than equal to 51%, then the brought forward loss of the previous years would not be carried forward under section 79. That's where they're asking about the change in shareholding. Regards to that, whether the SC has incurred any speculation loss under 73, or speculation loss can be only set off with speculative income. Speculation is like horse races, etc., betting, and trading of shares, and where the SC has incurred any loss under section 73E. 73E is like specified business, that is the business that were covered under section 35 AD. Okay, those one. And in case the company has any deemed speculative business under section T3, have to be reported it here, and that is with regard to clause 32. Now we'll see clause 31. In clause 31, we have a lot of sub clauses that were given here. But in order to sum up that into very simple portion, first we have to learn these 5 words. This is set A, that is check bank draft, RECS, that is electronic clearing system. And set B, account payee check and account payee draft. You have to remember these two, and we'll use them to make this clause 31 so simple. In A, what is with regards to 269 SS, where you have particulars regarding the loan or deposit that exceeds the limit. What is the limit? 20,000. 269 SS, loan and deposit. And again here in B, 269 SS. But here it's specified sum. Why they have put specified sum here? It is like advance that was given for transfer of like immobile property, etc., right? Those advance sums and on any other amount, like an advance, that was covered under here. A, 269 SS, loan or deposit. B, 269 SS, specified sum. Okay, now we'll see BA here. With regards to 269 ST, that is receipt of amount, right? That is 1 lakh. Receipt of any amount, we have to write it in BA. And in BB, what we have to write? 269 ST, again with respect of receipt of the amount only. But what's the difference between BA and BB? Here comes the two sets usage here in clause In BA, that is otherwise than by check, bank draft, or electronic clearing system, that is set A. Otherwise than set A. In BA, 269 ST of the amount received, otherwise than by our set A. In BB, otherwise than our set B. That is account payee check and account payee bank draft. Okay, that is with regards to that. We'll go in detail what all the details have to be given later. In BC, 269 ST. By this time, you would have understood that all the sections were repeating twice. 269 SS twice, 269 ST also have been repeated twice till now. But 269 ST here comes 3 times. That is again with respect to the payment. Payment. That is, you see, receipt. For the receipt, it has repeated for 2 times, for 2 sets. And here, for the payment, it has again repeated for 2 times for the same thing. Otherwise than for set A, otherwise one for set B. Okay, 2 times, 2 times. Okay, and now C, and we have D and E here with respect to 269T. Okay, third one 3 times. First one 269 SS 2 times for the loan and deposit, and 269 SS for the specified sum 2 times. And after that, BA ST receipt other than set A, 269 ST for receipt other than set B, and second time 2 times 269 ST payment other than set A, 269 ST payment other than set B. That's it. And now we have move on to the 269T, that is repayment of the loan in cash, that is 20,000 the limit is with respect to repayment of loan 269T, where the repayment was made as per set A, and this is the repayment was received. You see, for D and A, it is received. Okay, it is received otherwise than set A. Okay, this is made as per set A. This is received otherwise than set A. Okay, and this is also received only, but otherwise than set B. That is, they will have received by through a check or bank. That is other than or account payee check or account payee bank draft, that is otherwise than set B. Okay, made otherwise, made as per set A in what? C. D, received otherwise than set A. E, received otherwise than set B. And with that said, we have completed our 31st clause. And what all we have to we have to give information is with regards to the name, PAN, and the amount of the loan, or amount that was received or made or repaid. That's it all we have to talk about. And regards to 30C, whether the SC has entered into impermissible avoidance agreement as per section 96 during the previous year, if had agreed agreed to the such arrangement, you have to write about the nature of that impermissible avoidance agreement and the amount of tax benefit regards to that. And with regards to clause 30B, when the SC had incurred expenditure, that is interest expenditure, exceeding 1 CR rupee, then as per section 94B, again international taxation, where only 30% of that interest was allowed when that was more than 1 CR, right? So we have to write the details with regards to the amount of interest and ABI, ETA and all. This is the relates to that. And as per 30A, whether there were any primary adjustments that were happening or any kind of adjustments that were made, and the amount of that has to be repatriated to India, and the interest if not repatriated. Yeah. With regards to 30th clause, the details of any amount that was borrowed on hundi that was otherwise than account payee check. And with regards to 29B, where any amount that is included as income chargeable under the head other sources were referred into section 56 of 210, that is other source of income, right? They're talking about the other source of income there, and the nature of income and the amount that was included there. And 29A was whether any amount that was included under the head income from other sources under 56 to 9. What is those 56 to 10 and 56 to 9 were? That is, 10 is the gift that was more than value of for 50,000 and all, and for 9 it is the forfeited advance that was received, and the property was not charged. And 29th clauses, where in the previous year the SEC received any consideration for issue of shares which exceed the fair market value, we have to write here. And whether the in previous year received any property for a inadequate consideration, if so, we have to mention the details here. And in clause 27A, the central value added tax credits and the value added tax credits, any credits were there, we have to mention it here. And the particulars of income expenditure prior period credited or debited to the profit or loss account with regards to such. And in 26th clause, in respect of the sum referred in clauses A to G of section 43B, the liability of which pre-existed on the first day of the previous year. What is 43 and 43B? 43B talks about the expenditures that were allowable in PGBP chapter, and there was a whole case scenario with regards to this, and we have explained that in detail there also. Okay, what they are talking about is that the expenditure that is like pre-existed expenditure that is outstanding that were paid during the previous year and not paid during the previous year. You see, paid during the previous year, that is the current year for which the tax audit was being prepared, and not pending, that is outstanding is still outstanding for this year, okay, which were incurred in the previous year, that is current expenditure in the PG, and paid before the due date of filing of ROI, they have paid, and if not paid, that is they were still outstanding here. Next year, this outstanding only will shift to here, okay. That's what they're talking. This is a very important clause one have to see. Any amount of profit chargeable to tax under section 41 has to be written here, and the amounts deemed to be profits under section 32 AC, AD, AB, ABA, etc. AC have to be written it here, and the particulars of payment made to a person with regards to 40A2B, and the interest that was admissible under section 23 for the micro, small, and medium enterprise have to be in 22. You see, something which I'm not so much stressing about is something that was not so important. Now we'll move with our favorite clause here. Yeah, 21. This is the biggest clause, and after this, everything goes super fast. Okay? The first one is, please furnish the details about the amounts debited to P&L account, being in nature of capital, personal, advertisement expenditure, etc. Obviously, capital expenditure is something we have to not put it in P&L account. That's why we are asking. Personal, we have to not put that. What are the something that we have to with regards to advertisement expenditure? We'll see. Capital expenditure, yes. Personal expenditure, okay. Advertisement expenditure in any souvenir brochure published by a political party, okay. We have to not advertise in any souvenir or brochure or pamphlet that was published by a political party. That is what the qualification for advertisement, okay. If advertisement was like this, then you have to report it in 21A, okay. Expenditure incurred at clubs being entrance free and subscriptions, and at clubs being for cost for club services and facilities used. This is the entrance fees, and this is for the facilities that we'll be using for any clubs at clubs. Okay, expenditure by way of penalty or fine or violation for the time being enforced. The penalties also have to be given here, and any other penalty which was not covered above. This is the any law for the time being enforced. These were not covered above means that have been stopped being enforced, but you have paid penalty for that. Then you have to write it here. And the expenditure for any purpose which is an offense or which is prohibited by law has to be written it here, like any kind of bribes, etc. will be here. And that's for A. With regards to that, all the capital, personal expenditure and advertisement with regards to the brochures on the political party and expenditure at clubs with entrance fees, subscriptions, cost of the facilities that were used, and with regards to penalties for the acts in force, for the acts not in force, and any other for which prohibited by law. Three kind of penalties, and that's it. And B, inadmissible under section 40A. That is, these expenditures were not allowed as per PGBP Act, PGBP chapter. Okay, a payment to a non-resident with regards to that, details of payment which for which tax was not deducted, 100% disallowed was here. And details of payment on tax has been deducted but had not been paid. That is, after deduction, it has to be they has to deposit with government within 7 days, right? And all the due dates, if they have not done, this has to be here. And for details of as payment referred in subclause 1A, that is this, details with regards to that, and the details about the tax that has been detected and has not been paid with within the due date of the ROI, within submission of ROI has to be given there. And the amounts debited, don't put so much concentration on the these points. These anyway we could write, because anyway they will give us a situation or something, or we assume a situation. What we have to write, we have to write about the name of them, or the tax has to be detected, the amount on which it has to be detected, date we have to detect, on the payment we have to make, or the due date. These are something so generic. Don't put so much effort on writing this. You need not write whole thing. If you write 3 to 4 points, they will just reduce a mark or so. And for that 1 mark or so, don't put so much stress, and don't make a mess over here. Okay, this is so simple. Remember all the things what you have to remember. Okay, what is important. Okay, and amounts being debited. Don't put so much concentration on all these things. Okay, remember as a human how much you could remember. Amounts debited to P&L account that were interest, salary, bonus, commission, which were inadmissible under section 40B, 40BA. As we know, only a certain portion of the remuneration or interest like say 12% or bonus or some commission, that they have some limits, right? Other than that, were inadmissible here, so we have to write it here. T for disallowance with regards to 40A3, we all know that more than 10K expenditure in cash, that has to be disallowed here. And with regards to that, on basis of we have to provide details with regards to the payment and nature of payment and amount and their name, etc. And this is also same thing. Provision of payment of gratuity. The gratuity is only allowed when it was paid before due date on the day, so it has to be given here. If not paid, any sum of the SC employer not allowable under section 49A9 was something that is expenditure with regards to any trust or contribution fund which was not approved, was given here. Particulars with liability of any contingent nature has to not be in financial statement. There had to be only provisions. Contingent liabilities have to be given in disclosures. Okay, the amount of deduction inadmissible under section 14A, that is expenditure on income that was not form part of the total income. You see, on any income, in any income that is which were in the return and you're paying tax for it, you can claim expenditure on that, but you cannot claim expenditure on the income that were not showing in the return itself. Okay, and amount inadmissible under section 36(1)(3) is with regards to interest on the capital that was borrowed, and with regards to that, this is what for 21 clause. That's the biggest clause we have completed, and move to the 20th, as any sum paid to employee in a bonus commission for the services rendered by him, otherwise payable by him as profits or dividend. You see, in FO, we have come across few problems such as like if this manager had crossed this amount of percentage of profit, this portion, a portion of that would be distributed to him likewise. This is also talking about the same thing as with regards to you're sharing the profits or you're sharing in form of a dividend, but you're giving it as on the name of a bonus or commission there. All that amount has to be written here. And with regards to any contribution received from employees, mostly like PFs, etc., like 12% there, 12% here, right? Those details have to be given it here. And this is all admissible. We in 21 we have written all the inadmissible, right? We'll write all the admissible expenditure here with regards to the section down there. And 18th one is particulars of depreciation that was allowed with regards to the assets and all, and any adjustments, additions, etc. has to be given here with regards to depreciation, 18th clause. And the 17th clause with regards to compulsory acquisition and all, but it was not there in effect, like it was substituted by some rules over here from that. So you need not read the 17th clause. And with regards to 16th is amount not credited to P&L account, which should have been credited. And 15th is the following particulars of the capital asset that was converted into stock and details of that. And with regards to 14, the method of valuation of closing stock and any kind of deviation from the method of the valuation. Okay, and this with regards to the valuation of closing stock. And with 13th is the method of accounting that was employed and whether there have been any change in the method of accounting that was employed. And with regards to if change, whether they have increased profit or decrease in profit, the impact on the things and any adjustments there and the ICDS that were followed. If any deviations there, any adjustment, the net effect of them have to be also stated there. And 12th clause is the P&L account includes profits of any kind of presumptive basis. We have to mention it there. And with regard and in clause 11, we have to mention whether the entity has to maintain books as per section 44A and the list of the books it's maintaining, and the list of books and the nature of the relevant documents that have been examined. And 10th is the nature of the business or profession and whether any change in the such nature. And in ninth, whether it's a firm or a person, and the number of partners or members, it has any change in the profit sharing ratio, etc., which have to this. And in part A of 3 series, all the basic details like the relevant clause for 44AB for which audit is being conducted, the assessment year, previous year status of that PAN, and whether the SIN liable to pay indirect tax like excise duty, service tax, GST. If so, that number, PAN, address, and name. And that's it. We have completed our form 3CD. And now we'll move to our next part, that is concept takeaways. That is, these are all the important clauses that you have to remember and revise it one day before the audit exam. That's it. You have to revise it. And you need not revise more than this because no question has been asked till now. Apart from these clauses, you have to check. You may go and check all the previous question papers and all. All the questions that were asked from this clauses only, and you have to just revise it once. And we'll just move on to the questions now. We'll move on, and now we'll discuss few important questions in the fiscal laws chapter. First one, you see all the questions that were here were from recent MTPs and RTPs. So make sure you pay some attention so that these were the important points that would be asked in the examination. Mr. Nemi is a contractor dealing in food business, and they have got received contract from an NGO for some event, and Mr. Nemi received cash of rupees 1,85,000 and for 1,25,000. As a tax auditor, how do you report the above? Okay, there were two parties, NEMI and one NGO. You are as a tax auditor. To whom? First, you have to decide to whom you are being tax auditor. You see, first you have to understand how the question was asked. They have given a lot of details with regards to Mr. Nemi as his food catering business and decorating events, etc. And that is one point you have to note. And the another point is Mr. Nemi had received. You see, they haven't given, the NGO had made payment. They were standing on behalf of Nemi, and they're saying that Nemi received that much amount of cash. So you also have to be on behalf of Mr. Nemi and think like Nemi's tax auditor. Why you have to think on whose party or whose behalf your other tax auditor is? Because you see, this is a violation of a section 269S. This has to be reported. Since you see in BA, it is the amount of receipt that was exceeding that 269 ST. And also there's a catch here. In BC, the payment made exceeding that limit 269 ST. If you think you were a tax auditor of this NGO, you might get a catch. Even though you know all the provisions right, but you have misunderstood on whose point you're a tax auditor. Instead of writing that 31BA, in order of writing 31BA clause, you have written 31BC, and the examiner cancels the whole answer even if you have written the same thing from a different point of view. Okay, make a note that on whose point of view you have to think. This is a first tip for your examination, how to write out or the audit answer with regards to fiscal laws. Okay, and as usual, we have to write the provisions. For the provisions, you'll get for 1 mark, and for the clause, if you have identified the clause, you'll get 1 more mark. This question is for 5 marks. And if you have identified and then elaborated the provision for this, you'll get 1 mark. And all the matters that were written here, that has to be reported. What all the things that were given in the question itself, you have to write what they have given. They have given the name and a PAN number of the SC, and the nature of the transactions or the contract, and the amount of a receipt that was there, and the date of such have to be given. In the present case, Nemi contractor dealing in some food and all, they have all together in a single day, in a single contract for a single person, had received a cash for more than 2 lakhs. And then does the tax auditor required to report the same in 31BA. Okay, and we'll move to next question here. Ms. Vrinda, a partnership firm, has manufactured some parts and CA appointed as tax auditor for that Vrinda company while carrying tax audit under section 44AB. CA had identified, tax auditor identified few things. The interest paid to MSME. Some interest was paid to MSME. We have to report it, right? Yes, we have to report it. Under which clause? All above. Yes, under clause 22, that is the amount of interest inadmissible to MSME, section 23. Under section 23, so you have to report it under clause 22. Interest payment to 10,000, which was incurred for earning exempt interest. You see, this interest is exempt. That is, it will not form part of total income, total taxable income. So this expenditure is also not will be not taken. This is also an inadmissible expenditure. So we have to not write here also that. And the sum of 1 lakh was received from Mr. G for sale of one plant and machinery, but due to non-compliance, that was forfeited. You see, this advance forfeiture also was written on, which was also have to be uh, reported. 56 to 10, 56 to 9, both have to be reported. All the gifts that were more than 50K and all the advance that was forfeited. We'll just see the clauses under clause 22 with regards to the MSME Act. What you have to do? As per clause 22 of Form 3CD, you have to identify the clause name, and you have to write the provisions or elaborations with that. And what you have to do, you have to write what all the things that they have written in the question itself. You have to repeat and then write it as a conclusion that you have to report it in that clause under clause 22. For this, you'll get 1 mark. For this identification, you'll get 1 mark. For the conclusion, you'll get 1 mark. Since it's a bitwise question, only 1 or 2 marks that would be given at it. We can, what if it's given as a individual question for identification and provision writing and question, copy paste of the question, and then conclusion, you'll get 4 marks for this. Usually, these questions were asked for 4 marks. And as per clause 21H of Form 3CD of Income Tax Act, the tax auditor is required to report the inadmissible under 14E, that is expenditure on the income that was not form part of total income. And the same identification and elaboration and question copy paste, and then you have to write the conclusion. 4 points, that's it. And with regards to clause 29A of 3CD, you see, all the clauses that were here were our from our important clause list only, right? See, all the 22, 21, and here it is 29, all from important clauses only. You pay some more extra effort for learning only that 16 or to 17 clauses, and then you could work you could easily write all the answers or all the questions which were asked from physical laws, okay? And from clause 29 of Form 3CD, what you have to you have to give all the amount that was forfeited as taken as an advance under section 56 to 9, okay? Yes, now we'll see the next question here. CA Gunjan was doing tax audit of some company which is showing 4 CR credited as duty drawback in its P&L account. Okay, duty drawback is the tax refund or the duty refund that was paid by the customs officers, custom department, right? Okay, where we have to report that. How should she perform audit procedures to comply with specific reporting requirements under Form 3D? You see, they are saying how she should perform the audit procedures with regards to that. What you should do first, whether it has to be come under the tax audit report or not, it comes under clause 16B. That's also again in our important clause number where 16B are here. The pro forma credits or duty drawbacks or refund of duty by customs or excise or service department, which were admitted as due by authorities, have to be reported here. Okay, the same thing we have to write. Identification 1 mark, writing provisions again 1 mark, and what you have to write, you have just written what all the list that we have read: pro forma credits, drawback or duty of customs, excise, service tax, sales, GST, etc. And all the relevance have to be admitted by those authorities. They have explained it in detail here, interpretation. And therefore the tax auditor need to scrutinize the relevant files. This is what the audit procedure they have talking about. If you have, they have just how the tax auditor will report till this question ends there, and there goes a conclusion that they have to repeat it like that. But they're asking how the audit procedure, that okay, talking about the audit process. So how the audit procedure have to be, they have to scrutinize the relevant files and subsequent records or copies of shipping bills, etc. These were the have to be done and take appropriate management representations. How to write these? Same as usual as per SEs. As per SEs, what we have thought in our revision, what's a golden rule in order to obtain sufficient and appropriate audit evidence, what all the auditor could do. He could do inquiries, reperformance, recalculations, again, any kind of inspections, reviews, etc. Right? Instead of inspection, they have written scrutinization. That's it. Nothing much more than you could replace the word inspection. Okay. And what's question B? It was noticed the amount of 5 lakhs of duty drawback pertaining to few exports have not been credited to P&L account. Okay, the company had not credited, which was admitted by, which was electronically transferred, which was admitted by customs authority. Since it was admitted by the customs authority, it has to report it in clause B, clause 16B, sorry, clause 16B, as this is how she should deal with the matter, that we all have to write the same thing, as was not credited in the company, but since it's admitted drawback which has not been credited, the same has to be reported in clause 6 for form 3CD. And we'll move with the next question here. Mrs. P, associate, sorry, was appointed as tax auditor, and of a Q Limited, the company had incurred 6 lakhs towards advertisement expenditure on brochure pamphlet published by political party. Okay, this is the big long clause that we have been reading, right? 21A. Yes, in 21A, all the capital expenditure, personal expenditure, and expenditure, there were 3 types of expenditure, and 2 with regards to clubs, and penalties, 3 types, right? And the one was with political party here. It has to be reported under clause 21A. And the same we have to write. You have to write as per clause 21A, it has to be reported, and you have to write what all the things, and copy paste the question, and that's it. You're done with that question. It's a straight cut question. And the next question is, this is a question for which this is the reason for you to carry your calculator for your audit examination. Yeah. If they ask this question, you could write the answer. E Limited is engaged in manufacturing. It has a turnover of 8.13 CR in its record before adjusting the following things. What all it has? Discounts on sales, cash discounts, trade, commissions on sales, sales return, sale of investment. You have to know whether it is applicable, tax audit is applicable for this entity or not. Okay. Okay, now we have to find out the turnover for tax audit. Okay, the total turnover 8.13 CR. Okay, discount allowed in sales invoice have to be adjusted, and cash discount other than cash memos and sales invoice have to not be allowed. They are not allowed. Trade discount allowed. Commission on sales. You see, this is an allowable expenditure, but what we are finding, we are not finding profit, we are finding turnover. So in turnover, we don't see this. This is an indirect expenditure, not a direct discount. Sales return, we have to reduce. Sale of investment. You see, sale of investment is sale of capital goods, right? Capital asset, it's a capital receipt. Turnover is on operating operating turnover. So operating activity, it is an operating activity. It's an investment activity. So we don't combine both. Okay. Out of 8.13, what we have to reduce? 8.8 lakh 20,000, and a trade discount 2 lakh 90,000 and 1 lakh 60,000. And yes, the effective turnover is 8 CR. Okay. Now, what are the applicable provisions for the tax audit for an entity? That is 1 CR, right? If the expenditure, even it touches 5% all the cash expenditure, it's fine. Then the turnover from 1 CR, it would be 5 CR for applicability of the tax limit. All the cash expenditure was put at a limit that is maximum 5%, that it should not exceed 5%, then tax audit limit is 5 CR. And with that, we have to write all the provisions with regards to that. As for 44AB, the prescribed limit is 1 CR. If the turnover, the expenditure was in cash not exceed 5%, then the turnover limit from 1 CR to 5 CR. And after that, you have to write why you are deducting these all the 3 things and not deducting the previous things, and not deducting this sale of investments and cash discounts and commission on sales, and you have to give reasons for that. And after that, you have to write the effective turnover since it exceeds 5 CR by taking presumption that all the cash expenditure was below 5%. And you have to write the conclusion that for this entity, tax audit would be applicable. That's it. What all we have done here? We have written provisions with regards to this 44AB, and we have written the provisions and all, and we have given reasons for the calculation, which is very important. It gains mark. It will get marks. It will give you marks, and you have to write the calculation, and you have to write a conclusion. And we'll move on to the next question. You are tax auditor of some company, and they have submitted the tax audit report and the management notices there was an apparent mistake of law, and due to that mistake, they have revised the final accounts. And they're asking you whether you could revise the tax audit report or not. This is an RTP. As per section 44AB, when a threshold limit was crossed by the entity with regards to turnover, they have to get their accounts audited. And if the turnover, if that where they were eligible to declare the income on presumptive basis, that is what is the limit for the presumptiveness is 2 CR, right? But for tax audit is 1 CR or 5 CR depending upon the situation. Then they could, if they wanted to revise the tax audit report with regards to that, they could do so for with calculation of disallowance of section 40 and 43B as per rule 60. This is the circumstances they were talking about revision of tax audit report. Yes, auditor could revise the tax audit report. This is a direct question. Whenever they ask you with regards to revision of tax audit report, you may adapt this one. These are circumstances in which they have been given with regards to tax audit report as per rule 6. So this is a direct question actually. Okay. And now we'll discuss the last question here. AB Limited is a company in which public are not substantially interested. That is, it's an unlisted company. Okay. Unlisted public company. Okay. During the previous year, the company issued shares to its residents in India, provided the following data: number of shares 1 lakh, face value 10, fair market value 60, consideration 80. You see, the fair market value is 60 and the consideration received is 80. So that condition for securities premium, condition 1 was satisfied, that the consideration that was received was more than the fair market value. And the securities premium amount is what the difference between the face value and the consideration. 70 is the securities premium. 70 into 1 lakh shares, 7 lakh shares is the securities premium that they have to report in the tax audit. Okay, but if it is 50 here, if the consideration received 50 and the fair market value is 60, then even though the face value was 10 and this is 50, those shares were not issued at premium. Okay, first of all, the consideration should be more than fair market value in order to treat it as a securities premium, and in order to tell the shares were issued at premium. Okay, and the management of the company contends that the normal issue of shares needs not to be reported. The tax auditor, how to deal with this matter, they have to report in form 3CD under clause 29. First, you have to identify this clause. This is also an important question, and that's also a part of our important clause also. And you see all the 3 questions that were here, right? This calculation portion and the tax audit report revision and this fair market value securities premium, these 3 were something that was out of box. Okay, you have to also make sure that you have to revise this 1 day before the examination. And what all the main points you have to write? You have to write about the provisions that they were with regards to this clause, and you have to write a conclusion that they have to be they have to report that, and you are not accepting that it's not a normal issue, that it's not a normal issue. You have to write a conclusion with regards to that. And that's how we have applied our concept that we have derived, and we have discussed our important clauses, right? Important clauses, all these 16 to 17 clauses that were there, you have to at least read what, like you have to read it like the 2 to 3 lines that were given, right? And that's it, you're good to go. All the questions come from these 17 clauses only, and that's it. And after that, do compiler for 30 minutes. That's more than enough. How you have to do is like you have to skim up the things, like we have seen, right? The structure of how to write. First, you have to identify and write all the provision with regards to that clause, and then copy paste the question and a conclusion. That's it. Just skim that for 30 minutes, and that's it. You're good to go. And this time, we are not leaving fiscal laws for choice. All the best. Happy learning. And tomorrow, we'll discuss the peer review and quality review. Share it with your friends.